up, down, breakout. That's actually a nice little inverted head and shoulders. It's also a cup and handle. It's also a W that you could have traded. And you can see the end result. Vroom, up she goes. This is setting up the El Tangonator trade, everybody. Hopefully what you see here is MACD is making lower highs, not even remotely higher highs. Huge. Now, we would call this potential divergence. Somebody had asked yesterday, can you just review the difference between potential divergence and a confirmed divergence? And so I would make the argument that, just looking at this image right here, we could make the argument that this was a higher lows in MACD histogram. It's not by much, but it is there. And yet this was a lower low in price. So that is actually a bullish divergence where we're making lower lows in price, higher lows in the MACD histogram. It's not by much, but it is a divergence. It is there. And the divergence actually confirms right there. So as of this point right here, your bullish divergence was confirmed. So that is right there. And interestingly enough, what did the market do? Just went literally straight up here. But you can see now, this is not making higher highs. In fact, it's making lower highs. So right now, we would call this a potential divergence. And the potential divergence is confirmed if we go through this low here, kind of like what this is here. If we see the histogram go through this low here, then we know that we have this divergence is now confirmed. And we were actually looking at this last night in the lounge because two people on this site asked me to sort of do a couple tutorials for them. And so I drew up this chart, and I have to say, this chart was absolutely textbook. I was kind of like, hey, well, this is going to make my life easy to explain this. Really good example here is, and this happens to be Bitcoin. This is a 30-minute chart. Remember, the universe is a fractal, so it doesn't really matter whether it's off of a lower time frame chart or a higher time frame chart. Everything's all basically the same. So you can see how we made lower lows here, but the histogram made higher lows. So at this point, even though we're making lower lows and this made a higher low, we can't call that a confirmed divergence. The divergence is confirmed when we go through the middle part of the W here, which is over here. And then at that point, that's when you want to hunt for your W's to frame the trade. And you can see up, down, breakout. That's actually a nice little inverted head and shoulders. It's also a cup and handle. It's also a W that you could have traded. And you can see the end result. Vroom, up she goes. But oh, look at what's going on here. Later on in the conversation, I posted, well, you know what? You better keep your eyes peeled because now it looks like we have bearish divergences. Now, have these divergences been confirmed yet? The answer is no. But what's interesting about this is you can see higher highs in price off this bigger line, lower highs in the histogram. That's one potential divergence. And then notice, hey, we got higher highs in the price of this smaller line, and we have this smaller line that's making lower highs. This is actually an example of what I call a double divergence. Even more powerful signal. Has not confirmed yet. So we would call this a potential double divergence. What's fascinating is, and the next image that I shared with the gang was, keep an eye out. The divergence is confirmed if we break down through here. And lo and behold, let's go pull up that chart and let's see what happened. So it was on a 30-minute chart. Can you see how the double divergence, higher highs, lower highs, was confirmed here? So on the confirmation, of course, we already have trade location, right? If you are a reload shorter, remember this is a lower time frame chart. So reload zone, if you like that reload zone concept for trade location, notice right up into the reload short zone, right? We can even draw a nice red box here so you can visually see that reload zone. So remember I had said we had the divergences all setting up here. They haven't confirmed yet, we were in trade location, so you could make the argument. You have step one, we have trade location. Remember, 3-step process to frame your risk and your trade. So we have step one, trade location. We should probably put that as a red box, right? Step two, everybody knows, of course, at TRI. Step two is indicator confirmation. Can you see how the bearish divergence here was confirmed, i.e., indicator confirmation? And of course, we want to ideally see that Willie is stupidly overbought. And oh, what a coincidence. If we pull up Willie here, we see Willie is stupidly overbought. Look at that, minus 14, 15, 16. We're stupid. Stupid is as stupid does. Could even make the argument that Willie has a bearish divergence, a double bearish divergence, just like what you see out of the histogram. And probably if we pull up the RSI, oh, hello, we've got 1 high, 2 highs, 3 highs, 4 highs, 5 highs. Mind you, this one is lower high in price, but that high there. 4 lower highs in RSI as price is moving higher. Do you see the divergence? And it all confirmed. These M's all confirmed on this break here. This M on Willie confirmed on the break here. And of course, in the MACD histogram, what was sort of the primary piece of today's conversation, and I personally like to use the histogram for this concept, you can see that it broke down here. So at this point now we have indicator confirmation. What's step 3? 3 reasons to justify taking a trade. We have location, we have indicator confirmation, price structure. Is this not price structure? Up, down, up, failure. What letter of the alphabet is that? And really, the tell as to whether this is an attractive trade to take or not, and oh, by the way, yes, that is, confirmed bearish price structure, a big fat M. What you really want to do is you want to, at that point, now you have all your 3 reasons to consider taking a trade, you want to just measure out, all right, if I go and I short that M, is it realistic to see 2-to-1 profit objective on the trade? And what I'm saying there with 2-to-1, so what I'm saying is this is going to be your risk. You don't have any choice. That is your risk on this trade. You're going to trade the M. Your profit objective should be at least a 2-to-1 risk reward. And that way it justifies taking this risk. And do you see how we just came into a profit objective there? Hopefully you can see that. Ideally, what you'd love to do is draw a 50% rule and see that the 50% rule happens to line up with that 2-to-1 nicely. In this particular case, you can see it was a mountain man level that you had to shoot for there. You might have said, well, Brian, you know what? I don't want to be greedy and I don't want to be aggressive, so I'm just going to do my profit objective at the 50% rule, and that produced a 1.35 risk reward. That's okay. I would prefer, though, if you are new to this, to just try and focus on seeing if you can get that 2-to-1 risk reward. What's fascinating about this, so hopefully you can see how that all set up there. The irony of it all is, what do we have happening now? Lower lows in price, but is the histogram making lower lows? Well, what do we call this? Since we know that the middle of the histogram there, it gives us a reading of, looks like -9 there, -13, -9. -9 is the best it got here. We need to see this above -9 to confirm the bullish divergence. So right now at -19, it's potential, but does it not make sense that here we are in trade location, back down in reload long zone, and the divergence is trying to confirm. And then what we'd want to see to maybe frame a trade, maybe we even get a double divergence, is we want to see a W in price. Exact opposite to what we want to see here. right? The M to frame the short. So right now we would say, well, we are down in trade location. We're waiting on the divergence to confirm itself. Right now it's just potential. It has not confirmed yet. And then once this divergence confirms, then we can start hunting price structure to frame a long trade. So I thought that was a really, really good illustration of this concept of divergence and how it works with this sort of three-step setup. And in this particular case, we're operating off of a lower time frame chart, like a 30-minute chart. So do you think investors should be interested in these kind of signals? No. The answer is an unequivocal no. Should day traders, people that like to scalp this range that I've been talking about, the investors, they're sitting there doing absolutely nothing right now. But the lower time frame traders, in this particular case, operating off a 30-minute chart, I think they're actually pretty damn active right now. And I hope you can see how you can use this 3-day setup with things like trade location, indicator confirmation, price structure go to frame your trading here. Now, trade location, indicator confirmation, price structure, go. And now, what a surprise. Trade location, we're waiting on indicator confirmation. And then if we get price structure, we're probably going to get a rally back up top. And ironically enough, in the whole process, right, this is the day trader. Sort of the swing trader is sitting there watching this 4-hour chart, just going, Jesus, just big hurry up and do nothing kind of market. Back and forth. The lower time frame traders are shorting reload zones. They're buying reload zones. Shorting against top ends of ranges, buying against bottom ends of ranges, shorting against top ends of ranges, et cetera, et cetera. The investor, and really I might even argue the swing trader, they're just sitting here picking their nose. In fact, you could make the argument that the swing trader is probably watching this bot trade setup and humming and hawing about whether they should get long, looking for that swing trade up to 51,000.